Do not start that LLC. I know you may want to, but there are 5 things that you need to consider before doing so. Many business owners' businesses are booming right now, and you naturally want to take that next leap. But the things that I am going to tell you in this video, you need to understand before you pull that trigger. The first thing that I want you to consider is whether or not you're really ready to be that business owner. Many of you are just now starting your business. You may not even be certain that this is something you want to do for the long haul. You're just kind of testing the waters. If that is the case, do not start that LLC if you're still in that test phase. The reason why I say that to you is because when you start an LLC, you are now an official entity. You're now registered with your Secretary of State. And when you do that, you're going to have filing requirements until you form a dissolution for that LLC. So it's so important that you are serious when you go out and you actually form that LLC, because once you start it, it is yours until you shut it down. And once you register with IRS, they're going to come looking for that tax return until such time you officially say, I am no longer operating that business, and you have to file all that paperwork to make certain that that business is closed out. Number 2, if you are thinking about raising capital, if you need money in your business, if you're looking for investors, do not start an LLC. Now, I know what you might be thinking. Well, Carla, how do I get people to invest in my business? I want to go out and perhaps buy real estate. If you're looking to buy real estate, you may do that in an LLC. But if you're in a service-based business and you're looking to get capital, you're looking to get cash, you need money, do not do it in an LLC. You actually want to do that inside of a C Corp. The reason being, when you are raising capital, that comes to the Security Exchange Commission, the SEC. And the SEC has regulations, in particular Reg D, that talks about raising capital. It's important that when you do that, are you raising capital through a loan, which is considered a debt raise, or are you raising capital through equity, meaning someone is going to own a portion of your business? It's really important to understand the dynamic when you're raising capital. Many times when I am doing tax returns for people, I find out that they've received money from others. And guess what they've just done? They've just added another member to their LLC, unintentional. So you want to make sure you know exactly what you're doing when you get ready to form that LLC. The third consideration is making sure you understand that an LLC is what we call a flow-through entity. Any income that comes through your LLC flows back to your personal income tax return. If you are a single member LLC, it's going to be on your personal income tax return. If you are a multi-member LLC, the income is going to flow through to your personal income tax return via a Form K-1. So are you certain you want that additional income to show up on your tax return? Many people do not realize that when you are an LLC, you are in essence combining your personal income with your business income. And many times they will file their personal income tax return without any consideration to their LLC because they don't realize that it's all going to get combined at the end of the day. So making sure that you know how that income is going to flow and making sure you put some thought into whether or not you want that income to show up on your personal return is going to be really important for you to have a clear understanding of what that looks like. Because when you stack income on top of income, guess what happens? You're increasing your tax rate. So you want to make certain that that's the move that you absolutely want to make. The fourth thing that you need to consider is collection issues. If you owe money to anyone, it could be you owe money to the IRS, if you owe money to a debt collector, if you have back child support. Do you want to have an LLC showing that you own a business? You got to be very careful, and you have to think it through, because like I said, an LLC has flow through income. So when you owe people money and you're in a debt collection scenario, you might not want to be inside of an LLC, because typically you're going to have to disclose your personal income tax return, your 1040. Your 1040 is going to be read by a tax accountant, and they're going to say, oh, Mr. Smith also owns 123 LLC. And now they're going to open up all of your financial world. So it's very important to understand where you are and where you're trying to go before forming an LLC. Because once it starts, there's no way to actually get it off your tax return without jumping through a couple of hoops. So if you're in debt, do not form an LLC if you want to have control over the amount of income that you're showing on your 1040. The fifth thing for you to consider, if you know out the gate your business is going to be profitable, do you want to be in an LLC? Remember, my friends, LLCs are subject to self-employment tax. That's that 15.3% that picks up Social Security and picks up Medicare. So for example, if you make $100,000 in profit, you're going to have an additional tax of $15,300. That's not income tax, federal or state. That's self-employment tax. So if you know that you're sitting on profit and this particular business, do not form an LLC, because you're going to get drowned in income taxes and Social Security and Medicare taxes. So there needs to be some consideration around the type of entity that you are starting and the tax liability that is going to be associated with it. It's important that if you are considering an LLC, that you take all things into consideration, not just forming an LLC, but making sure you understand the tax implications, making sure you understand the compliance, that once you start it, you have to finish it, making sure you understand where you are in your financial world, because that's going to put additional income or loss onto your personal income tax return. And you may be trying to qualify to buy a home. You don't want to have a loss. Or you may be in a child support or debt collection issue and you don't want to show additional income. You also want to make certain that you're not just forming that LLC to say the name, to reserve your name. That's very important. It's important to understand all of these things when you're thinking about forming an LLC. And now that you know better, I expect you to do better. That is why I want you to like, comment, and subscribe so that I can update you on all things tax.